Okay, let's welcome our audience. Welcome to the Ready, Set, Gemini podcast. I am your host, Dan Mora, and directly across from me.
Hey everybody, it's Frank Smithson here.
Hey Frank, how's life?
Life is good. Feels good when you're productive, and I was very productive this weekend. My whole family was productive, and that made for a lot of work to be able to get done and people to feel good on Sunday and just chill.
Yeah,
it's kind of nice.
I envy that. I envy that. Wife and I did all the hard work this weekend.
Yeah.
All of it.
Good times. Yeah, I heard you were using a shop vac to pick up confetti for a couple miles worth of distance or something like that.
Yeah, so I have 3 graduates. I've got 2 8th graders and a senior in high school, graduates.
Congrats.
And so, yeah, thanks. So we had a big party. And we had these confetti cannons like this big and in the front yard, and the wind kind of kicked up during the night, whatever. It was everywhere.
I'm sure the neighbors were happy about that.
I think I cleaned it up before they had any negative things to say.
That reminds me of one time we threw a party for sales at my house, Gemini Sales, and I come in the next day and I do the presentations. We get through lunch, and then they all come up to me. He's like, "Hey Frank, like, is there anything you want to tell us?" I'm like, "What are you talking about?" They're like, "Nothing happened to your house or anything?" I was like, "I don't know. What do you mean?" And they toilet papered my whole entire house. My next door neighbor had woken up at like 6 a.m, saw it, and cleaned the whole entire thing. So I didn't even know. They didn't even get me. What an awesome neighbor though, right? Sorry, squirrel.
Words of wisdom. Do you have anything for grads? Like, what's your one advice
for grads?
Mm-hmm.
You know, I'm kind of that guy that says you're young, you just got free from school. I think education is hugely important, but maybe just take a few minutes to go explore the world a little bit. Live in a youth hostel in Europe, or a couple of them, right? Do a little backpacking, get out there and see some stuff, because like life's going to get real fast too.
Yeah.
You know,
I think that would be mine as well, is stay present.
Yeah.
Yeah. You don't necessarily need to travel the world. I mean, that's great. That's fantastic to do when you're young, but just take a minute and look at all that you have and all that's available to you, and just appreciate it.
It's really hard for them to see the world through the eyes of someone that's got more of that wisdom.
Yeah. Well, the change is so huge, right? I remember from high school to the next season, massive, like everything changes. So what you have now, like, let's take some time to reflect on that.
Yeah.
You know, and appreciate it. Take a minute.
Yeah. Yeah. My oldest is just walking on Thursday for 8th grade, going into high school. She's a little nervous. So she's a big fish in a small pond right now, and then she's going to end up being a small fish in a really big pond.
Yeah. That's a change. Well, today we're going to talk about universal health care. I've got, actually we've got some headlines. So a couple headlines we'll go through. Universal health care. There's 2 bills that are pending, are still going through the Senate and the Assembly. AB 1690 is a spot bill. This is a 2-year bill is the way they call it. It's an intent bill. The California Nurses Association has been pretty heavy on universal healthcare, and there's an Orange County rep, Calra, and he says, this year I see it more as an opportunity rather than a challenge. So in past years, they've been very trying to make big changes. And this year, again, with it being a spot bill, an intent bill, he says, I see it as an opportunity to grow the movement for single-payer healthcare and better understand how we can strategically get it to the governor's desk, because that's ultimately the goal, get it over the governor's desk. There's another bill, though, Senate Bill 770, that is a little bit more specific, and this is through a San Francisco senator that is making trying to use federal funds. They need to get federal funds in order to make it affordable for California.
Gotcha.
And they're calling it CalCare, which is kind of, it's got some progression there. And they're pursuing waiver discussions with federal government with the objective of a unified healthcare financing system which established a waiver development work group. The bill establishes a waiver development work group to complete a set of recommendations regarding the elements to be included in a formal waiver application. So this committee, this work group, would have a formal proposal by June 1st, 2024.
Things are moving.
Definitely
need to keep an eye on that stuff.
As in other news, I don't know, you have any comments on that one?
I think everything's heading that direction. Keep an eye on it.
Yeah.
Then
I agree.
It starts to get real. We just really need to understand how it's going to impact work comp.
Yeah.
So comments, would love to hear from the attorneys out there.
Yeah. Some other legislative news, SB 697 Hurtado would require the DIR to study the viability and regulatory steps to implement a value of care reimbursement system for workers' compensation claims. Now, the reason that that's important is because right now the state uses the official medical fee schedule, the OMFS, and HMOs and Medicare like a RBRVS, a resource-based relative value system. So there's a difference in that. The OMFS and the RBRVS is kind of competing ways of approaching medicine. And the bill will require the DIR to conduct a study on the viability and the regulatory steps that would be required to be taken to link healthcare reimbursement to the value of care provided. Okay. So this is an interesting, challenge to the current system that's got some legs. Again, this is a viability study, but lining up to have some significant changes in workers' compensation. It's been over a decade since we've had one. It's time. Thoughts on that?
It just seems like there's lots of change in the future. Mm-hmm. We'll see where it goes. I'm very curious. It seems like it has a lot of impact to change work comp at a pretty significant level.
Yeah. There's arguments on this that the specialists believe that the RBRVS favors primary care physicians over specialists and would result in unfair reimbursement cuts to specialists. Okay, so that is they say that the it's true, or they want to keep it the way it currently is because it allows more specialists in the workers' compensation system. So, is what it is,
Interesting.
Lastly, on headlines, another bill, AB 1278, was very hotly debated within our local community, workers' compensation community, California, and it was put on suspense. So that was proposing to allow group providers to be listed as opposed to individual doctors. So that got put on the shelf.
Okay.
Which is, I think probably a good thing.
Yeah.
If I'm being biased.
Yeah.
Though, the rumors are that it's going to find its way back into a different bill. So we'll see. We'll see how that goes.
They're trying to make moves there.
Yeah. So for our main story, I wanted to cover insurance companies leaving California.
Mm-hmm.
So this is interesting. State Farm, Farmers, and Allstate have all pulled out of homeowners insurance in California. Now, Allstate was the fourth largest in California. I have a Bloomberg article here and an ABC7 local or Bay Area article, and they are talking that, they're kind of dancing around it, but natural disasters, wage inflation or wage costs and costs in general, and inflation in the market have all made it less than profitable for these companies less than profitable. I'll put that in air quotes. in California, to do business in California, the their fees have surged 70% since 2019, which is pretty crazy. And then State Farm went to the Department of Insurance and asked for a 28% hike, and Allstate went to the Department of Insurance, asked for a 40% hike in their ability, or in their what they could charge. And then what happens is that they propose these hikes, and then there is consumer protection laws that limit the insurance companies how much they can increase their rates. So, average homeowner policy in California is $1,300 compared to more in other states with wildfire risk. And in Florida, for hurricane-prone areas, it's more than double. It's like 3 times California's average rate.
And on the way over here, listening to NPR, they were mentioning that Allstate and State Farm also pulled out of Florida as well.
Oh, wow.
So same thing, which is really interesting. You have 2 of the most populous states in the United States are they're no longer going to support. That's a interesting paradigm. Like, they're just going to like find the places that don't have any risk and sell people insurance there so they can make more profits.
For sure. They want to come back. Obviously, they want the market. Market's a massive market. They definitely want to come back, but not until it's a little bit more in their favor.
Sure. So one of the questions that I had documented for you here is, what's the revenue look like for them? Like, they're doing this stuff that they're asking for more money, but what do the profits look like? So I just Googled real quick. This is IBIS World, Homeowners Insurance in the U.S. Industry Trends from 2018 to 2023. It says homeowners insurance revenue has grown at a CAGR. You know what that acronym stands for? They're not telling us here.
No.
I bet you GR is growth rate of 3.8% to $147.8 billion over the past 5 years, including an estimated decline in 2023 alone, which is only 0.3%. So it's not a big decline. And the profit margins are set to climb to 12.1% of revenue. So they're making billions, and they're wanting to make more.
Yeah, I obviously they have thresholds that they want to keep when it comes to that, and I don't know what the loss was. I mean, that's a great question. I'm curious what the net, if you just take homeowner, what State Farm, for example, what was their profit and loss statement? What did that look like regarding homeowners?
Specifically in the States.
Did they lose money?
Yeah.
Who knows?
Yeah, and with California, there's like all that PG&E wildfires and all that stuff. State Farm's the one putting out the cash to the homeowners, and meanwhile, PG&E, are they getting away with it? Some may say yes.
Yeah.
And then the way they're getting away with it is by charging other people here in California higher rates. My electricity bill was $900. Did a good job of making me get solar.
Wow.
Which is working out well.
It's a motivator. Yeah, I've heard this in there's other, the auto insurance industry too has taken a big hit. And I have a buddy that's in the insurance industry that was telling me that from the COVID supply chain situation, that parts were harder to come by, and more expensive, like far more expensive. So you see cars getting totaled out as opposed to getting fixed if they're in an accident or if there's damage.
Interesting.
And that's just caused that the insurance companies have similarly considered getting out of California from an auto perspective. Those are a lot more cyclical, or the cycles are closer together. You renew your auto, and they raise them all the time, raise the rates all the time. So they're a little bit more, I think, flexible and responsive, the auto rates, but still a problem. The cost of their metrics are showing that it's more expensive to be in California from an auto perspective.
That sounds about right. There's a auto insurance called gap protection. Basically looks at the difference between what is the value of your car if it was going to get totaled versus what you owe on it. So I'd imagine that type of insurance is probably growing because more and more buyers are out there trying to get by. And so they're trading in a car, but then the next car that they purchase, it's just, they can't cover the loss. Right. So I wonder if that's going up. But then if they're having to pay out, which they're usually used to not paying out, like that's the thing with insurance, right? They want to not like have a claim go. And so that's where they make their money. When they have to start paying, then it's woe is me, give me more money.
Yeah.
I'm kind of anti-insurance. I don't like the way it works. It's really burdensome on people that make a lot less money than it is for someone that makes a ton of money. So imagine a homeowner in California. A lot of them are probably multi-family dwellings just to get by. They have an insurance cost, and then let's say they want to come in and increase that. You're already struggling on top ramen, and now you have to pay more for your insurance just to protect yourself from a fire or whatever it may be.
Yeah.
Scary stuff.
Still, relatively free market in the respect that there's still hundreds of insurance companies out there that are willing to write insurance.
Sure.
And for less than their exposure in a lot of ways.
So what's going to happen if, let's say, climate change is real, global temperatures continue to warm, which is going to create more wildfires, more sea level rise, more stronger hurricanes, bigger weather events. Like how are they going to address this new trend?
You're seeing it.
The insurance companies are going to go away. Like, is government going to have to get in, regulate? Like,
insurance companies are one of the most stable types of companies in the world.
Okay.
You just said it. The billions that they make, the money that they make is so they fine tune everything. I mean, they're smart folks. They know how to make money. Not only that, but they have a blank check. Every state has not every state, but I think most states have checks on how much you can raise those premiums, but they're not going to hesitate to raise those premiums ever. You know what I mean? Unless they're told that they can't, and then they're going to be
so
like,
that's
peace
the
out.
Consumer protection laws.
Right.
And I guess the question is, are the consumer protection laws actually feeding Exodus?
Well, for sure, in my opinion. I mean, if you're, this is a great example. Allstate, they asked the Department of Insurance for a 40% increase in homeowners, and they were told no. So like, bye.
So what would happen if all of a sudden State Farm, Allstate, all the other insurance companies would probably follow suit, right? Because they can. Once the big companies get that cash, what does that happen? What happens to the economy?
Well, I think that's probably why the insurance commissioner was like, no, I'm not going to approve that, because you can write, you're making billions of dollars, and you can write it for cheaper. You're just being.
It's so hard for me to try to grasp the idea of an insurance company leaving California. Like, that many accounts they're just willing to say no to.
Well, it's a new business.
Only new. So if you're already in, you got like a grandfather?
To a degree, again, they can cancel policies, and they do. And there are definitely lots of stories out there of policy cancellations just because of risk exposure. You're in a fire area. Yeah, so there's no grandfathering.
Or floods too, I guess, is another big thing, right? Especially last year. We'll see how that repeats itself.
Flood insurance. So you think about this in the insurance industry. You're an insurance company. You cover you have property casualty, you have auto, you have commercial property casualty, you have residential, you have, like you said, flood, all these other arms, and this one arm is not producing like you want. I'll let it go, or I'll lose money on it, and I'll make it up on these other areas.
But we're talking about people and protecting their livelihoods and their future generations, right? So it's just a little. I mean, you have other means, other alternatives.
Yeah, there's other alternatives. It's not like, I don't think this is doomsday. I'm curious what it means to comp. We've seen this too, I've seen it in my 20 years in comp. there's companies out there that'll write comp insurance and then they're gone over the years. So it's cyclical. It happens in comp. Rates go up, rates go down. So just is what it is. But
interesting.
Yeah, I don't know what it means, for employers with comp insurance. Same situation. You're always jockeying for who's got a better deal out there.
I mean, kind of like, we want small businesses to be able to come in and enter into the market. And then, if you're a big company, a middle company, you can afford, a little bit of an increase. Probably can manage it because you had to have some form of revenue to get where you're at. But then you're a little guy trying to start up. What does that look like for them? To me, these types of things really put pressure lower down. It's almost like, I was talking to you earlier about this idea of like speeding tickets. If you make a ton of money and you get a fine for speeding because you were going too fast in your Ferrari, you probably don't pay the $300 ticket. You probably pay $1,000 to an attorney to get that ticket off of you so you can speed and do it over and over again, right? But then you're a poor guy mashing around in a beat up 15-year-old Prius or whatever.
Mashing.
Yeah, it's fat. You got it pinned, right? You're going 70 in a 45. You get caught, and then you get this ticket, and it's $300, and then you can't afford the $300. So then, shoot, you could have your car impounded because you didn't pay the fine, and then now you need to go back and get another car just to get back and forth to work, and you got to pay 23.99% interest rate, which you can't afford. Right. So it's just like you're stuck in this spiral when you're poor, and when you have money, it's like,
I would argue that, for either party to educate themselves as much as they can.
Yeah.
So that if you're poor, you're not doing stupid things like going 70 in your Prius in a 45 and, you can't afford it. I mean, it's just like, I don't know.
Hey, if you're rich and you can afford it, have fun. But if you're poor and you can't afford it, you better educate yourself.
Both should educate themselves. That's my point. Both should.
For sure.
Yeah. There's no, what is it? Ignorance of the law is not a valid excuse. So,
Sure.
I believe in that. I really do. Because I really believe in that. Anyhow, any final thoughts on insurance companies? And they are kind of the devil. I'm not.
Don't ever buy car insurance if you can afford to fix your own car. Don't ever buy it. I sold finance. I'll tell you right now. I mean, don't take this as like personal legal advice, like whatever caveats there are there. But I sold that stuff, and it very rarely pays out. The insurance companies make a ton of money. First of all, they charge you way more. That's how the finance managers make money, right? It's like the cost is $400. They charge you $2,000 so they can get a percentage of the profits, right? So ask for a discount if you need it, but you're buying a Honda or a Toyota, like you're not going to break down in 100,000 miles. So don't do it.
Yeah.
I'm anti-insurance. Sorry, insurance companies out there.
I'll tell you, I think insurance is a necessary evil, and I'll call it an evil of this world that is necessary. There are evils of this world that are necessary.
If you can't afford a breakdown, then you should get it. There are times when it makes sense, but if you have capital, if you can come up with $2,000, then don't spend the $2,000 on the insurance company, because the chances of you using it is very rare.
Yeah,
that's how they make their money.
So you're advocating the same thing as I am: is educate yourself.
Yeah, definitely.
Yeah,
yeah.
All right, man. On that, we'll close. Let's get the likes, the comments. We
follows.
Love our audience. Let's get you guys involved.